Alrighty, good morning. It is Thursday, it's Thursday, July 7th, 2022, and we're gonna get started here. I want to go back and just show you some of, despite it being such a choppy day yesterday, some of the beautiful reactions we got. So let's swing back here and look at now the open and the first hour or two of the trading session was an absolute disaster. It was just very balanced, very sideways. I did catch a short after the breakout out of the open, which I told everybody was probably a fake out. It wasn't for an actual bullish breakout. When it failed and we had some really nice market internal clues, I went ahead and shorted the market off the FMA, which did follow through from 41 all the way down to about 23 for just under 20 points until it came back up to the entry. And you can see we tried the FMA, we tried the OPL, we tried the 200 moving average. That ended up giving you a nice 10, 11 point push. And then from there, later on in the session, when we came back up and failed the second time and we couldn't even get up to test the high, in fact, the market came up about, I don't know, 2 points shy of the high of the morning and then failed once again. Again, with some more internal clues, I went ahead and shorted the FMA and did capture a pretty nice move. But as you can see, I think about 7:30 I walked away because this is what we dealt with all morning. Just up, down with no real rhyme or reason. I want to show you what ended up happening. If we just were waited a little bit later into the morning, we came down, held the back end of the VWAP, came back up, and then held our OPL almost to the tick. It held it to the tick, but of course they had to come down, hold the FMA, and come up and peek through it by about 1 point, or if that, yeah, just about 1 point, and then failed from there. And then we came down, and this is why I want to show you this. We came down and held our minor eye level basically to the tick and came up and then had trouble getting through the major eye level at 22 here. Got a little messy. In fact, earlier on, we came down and bounced off of that right to the tick. And so we had trouble getting through that level. And then eventually we broke on through, came up, pulled back right to 38.22. I think it bounced one tick in front of it there and then came up. And what was the high of the day? The high of the day yesterday was 38.75. Our next expected resistance level, if the market could get up through the retracement here at 38.70. So you can see that the market came right into 38.70 here and then pulled back and then went right up and right into 75 and failed. So just amazing stuff if you ask me. Um, it was a little bit messy, but pretty awesome stuff. And then even once we held the, below the OPL, came down, held 12, and then came up and got above the OPL. It held as a support here for a little while. Now you can see there were some little peaks through it, but essentially we were holding the OPL in that previous swing, and then it got sloppy again, and then we came up and made that high at 75. So some pretty cool stuff. And then going into the overnight session, the market bounced out going out to the end of yesterday and then came right to 38.53, our minor eye level, and then failed from there at the beginning of the Globex session. So came down. We actually held this level right here that we held is the 50% retracement of this leg. So if you go from 12 up to here, or I'm sorry, it's the 61.8, and we have to go from the low of the day. So the low of yesterday, 38.0875, up to the high of yesterday, and let's look at where the market came down and held in the overnight session right at the 61.8. So it did peak through it by about 1 point and then came up, and now we're starting to push here in the overnight session coming into the pre-market. So again, just some beautiful stuff. All the things we look at still working despite it being a little bit wonky here. And I think that brings us to looking into what we're going to deal with this morning. So you can see that there is an attempt by the bulls right now to hold things up and push. In fact, the overnight low down here, let me get the actual number, 38.32 half, up to the overnight high right up here. we came down right to the 50% and now are starting to come back up and break that previous high by a few ticks so far. So again, a beautiful little hold of the 50% retracement of the overnight leg, and now we're attempting to break out as I speak right now. So beautiful fib stuff going on, beautiful hold of our levels, and let's go ahead and jump up. We're going to go to the daily and look at what happened here. So yesterday we talked about there being a potential bearish divergence off of yesterday's high. However, remember I also said we had what looked to be a potential bullish bar. So we had a bullish looking candle, which would have uh, gave us a clue that we would break to the upside and continue going, was contending with what looked to me to be a bearish divergence. However, I told you that we need to really see what happens yesterday, the day after the close of this candle, and coming in today, because we had a flat RVI, and with that type of formation, it's not really what I like to see. You know what I say, I like to see at least some type of defined peak on the RVI, but there was an argument. Well, it looks like that was a false signal. So I'm going to go ahead and get rid of that. It ended up carrying through and continuing to push, and so did price. So I don't think that, even if it is a signal, it was failed. It didn't hold, and we just continued going right on through it. Or I should say a false signal. So today, this morning here, you can see we did push up, make a new high yesterday, and we essentially came right into the 61.8 retracement of the sell-off. So going back to the highs where we saw the weekly bearish divergence in line with the 4-hour and the hourly, and then somewhat of a daily bearish signal. If you come down and measure the leg, we're right up into the 61.8 retracement here. So remember, 75 was the eye level that we tagged yesterday, and that was the high of yesterday. 70 was the 61.8. So we peaked on through it by about 5 points there, and now we're just kind of playing around, seeing if we can break through that high from yesterday. I don't have any clean signals to really indicate here. There's no indication of a bullish or a bearish divergence right now. All we do have are these big wicks, and let's see if I remember this code right. We have these big wicks here to the end. I think it's because it's anchored, it doesn't want to move, but you have the big wick there. And then yesterday, even though it's somewhat of an ambivalent looking candle, pretty big wick to the downside as well. And then if you look back to a couple days ago, lots of big wicks to the downside, and then some bullish recovery on these candles right now. That's all I can say from the daily perspective right now. Keep in mind that we do have the bigger retracements up above us. We came up and messed with the 38 a couple days ago there, pulled back, and now we're attempting to break out. Like I said, remember that the 50% is up here right around 39.20, and the 61.8 is up here right around 39.87. So we've got those two to contend with if the bulls continue to push. And then, of course, we've got that pocket there that I talked about earlier for the last few days. In fact, I think all of last week, 4,006, 4,017 or something, and then 40.30. So be aware of those kind of larger time frame structures, and then that major swing low that we have up at 40.74 half. On the 4-hour here, looking to some signals. It's been, to be honest with you, yesterday was a total sideways chop session. And so these signals, we kind of get prints off the highs, prints off the lows, and it's kind of wonky right now, to be honest with you. But we do have a bearish divergence from the high of yesterday, just before we went into the overnight session, and we have a bullish divergence from the low of yesterday. So, or at least on that first pullback. So some counter signals back and forth given the situation with all the chop. Um, One interpretation, obviously, is if we can get through the high of yesterday, we're going to get through that 4-hour bearish signal, which might even line up. Let me go to the 60-minute. Yeah, a 4-hour and a 60-minute bearish signal from our minor eye level, 38.75. So if the bulls can push through 38.75 this morning, we're negating that potential bearish signal. So be aware of that. what else on the 4 hour here? Nothing really much else to say. Obviously, if we come down and break the low of the overnight session and we get down through the low the low of yesterday, we're looking at the deeper retracement levels. We're looking at some of the eye levels down below. Um, those are the two kind of holding lines or dividing lines with these divergences. So let's go into the 60-minute chart and look at all the levels we're going to be trading with today. Above us, and let's just go through this very, very quickly here. Above 38.75, we already talked about all the levels up here. I spent all last week and yesterday talking about everything that could potentially cause trouble as the bulls push higher here. So above 75, you should already know what levels we have up here. Okay, there is a major swing here at 38.85 and 3/4 right there, and I'm going to extend this out to tomorrow so it's visible on our short time frames there. So be aware of that swing. And then from there, it's basically up to all the levels I mentioned. On the flip side of things, if the bears somehow sell off about 100, 150 points and get down through the lows of last week here, then everything down below here is all the same stuff as well. So I'm not going to spend time listing out all these levels since I've already done it probably 10, 15 times. So be aware of all the potential supports we have down below the low of last week. And now let's talk about what's going on in between the low of 2 days ago, basically the low of last week, and the high of this week. So what do we have here? And there's a reason I had this drawn. Okay, so we have the major fib leg. We have the low of July 5th here, all the way up to the high we made yesterday at 38.75. That would be the major fib leg to the downside if we pull back, right? We talked about the major fib leg to the upside here from all the way from 39.50 down to the low of last week. And we talked about we're coming into the 61.8 of that level now. So we're basically done with the fib to the downside here, or to the upside, I guess, depending on how you want to phrase it. On the downside, we have this fib leg, which hasn't been tested. And in this case, I'm going to erase the 38.50 and 61 off. And you can see I've got the levels right here. We've got the 38.25. We've got the 50% retracement down here at 38.09 half. And we've got the 61.8 here at 37.94. Notice the 50% retracement of this leg up from 2 days ago up to the high of the overnight session. 50% is sitting right at the low of yesterday and right in between 38.07 and 38.12. Okay, 38.07 yesterday, basically acting as the low of the day. And then you can see the bounce going into the afternoon session yesterday right off 38.12, which we talked about. So this little area here, basically this zone between 07 and 12, could be a hot spot for a bounce. We have seen a lot of reactions from that area in the chart, so be aware of that. Outside of the major fib legs, we do have our major eye levels, 74.5 and 38.22. And down off 74.5, there is a swing 1 point below that I think makes sense. So I have this shaded from just about 37.73 to 37.74 half as a small pocket of potential support if the market gets down there. And that's almost basically it. There's two other things I have to talk about here outside of our power levels, and that is this right here, this shaded region from, and let me just give you the levels, 38.32 half to 38.34. That pocket right there, remember I talked about this fib here from the low to, and I forget exactly, well, it was from the low of yesterday up. we have the 61.8 and then the low of the overnight session here. So the 61.8 of a smaller leg, basically the leg of yesterday, the low to the high, the 61.8 of that plus the low of the overnight session. When you put those two together, you get that pocket. So we have that pocket right there. And then we do have the only other relevant level that I see, and that is this area here. You can see the market came up and rejected right around 48.50, 49, came up, rejected once, came up, rejected twice. We came up and peaked through it, and we came up, rejected a third time. And then in the overnight session of coming into this morning, we had a lot of support from that area, broke through, came back up, pulled back, and then held it again almost to the tick to come back up and again come up and see if we can get through 75 here, the high of yesterday. So that little pocket right there is 38.49.50, and sorry, it's 38.48 half to 38.49 half. So a little 1 point pocket there, and that could, because it's been so relevant for the last day or two, could very well still act as some type of either support on the upside, or if they break down below it, they could pull back right to it and use it as a resistance. So that's what we're dealing with within the last few days of price action, and from the last week's low up to the high we've made so far in that range of time. Um, we have the OPL here. We have the close of yesterday right around our minor eye level. We have that support and resistance level, 50% of yesterday, 61.8 of yesterday. Um, we've got the larger fib legs that I mentioned, and then we have a lot of confluence here with the fibs, the low of yesterday, and our minor eye levels. And I don't think it makes sense to really mention much else. These are the pockets of potential support on the pullbacks, and then if the bulls do rip higher, I would expect each of these areas to be potential failure points where the market would come up, just like yesterday off 75, just like the day before that, right off of the retracement level at around 55. We get these little inches higher and then major failures, and then inches higher and major failures. So that's kind of the theme for the last few months. And I'll leave you with that. There's not necessarily a major strong bias right now. But again, the theme seems to be bullish pushes and then a swat back down by the bears to push the market lower. So have a great morning to those watching on YouTube. Gonna get ready here for the open. Let me just make sure, I don't think there's any major planned news announcements, but we do have the Fed balance sheet coming out at the end of today. Could be also why with FOMC minutes yesterday afternoon and with the Fed balance sheet, maybe why it's been so wonky here, but who knows. So have a great day. We'll see you tomorrow on Friday.